Good afternoon, everybody. Welcome back to the Opportunistic Trader. It's just after 2:30, just after the energy close on October 5th, and it has been an active energy day. Nat gas up over 8.5% today. Crude oil had a pretty good range over $1.50, and so we've got a lot to talk about, and we're joined by Brynne Kelly of the Fundamental Angle. How's it going, Brynne?
Oh, it's going good. It was a crazy day, finally getting some like winter type price action in natural gas.
Wild day, absolutely. So it's Monday. So on Sunday when we opened, we were just looking before, we opened above 345-ish, which was, over a 5% rise at that point on a gap open. And, we've just had a huge move up over 8.5% in that gas. So I guess the question is, what's the news? What drove us, why the 8.5% move? And was there any indication last week of any of this coming?
Yeah, well, it's always you want to kind of try to find a narrative that fits everything, and so I've been kind of thinking through a couple things this morning and last night. Going out at the end of the day on Friday, everybody was sort of focused on short-term forecasts, and we still weren't, cash always on Fridays can tend to look weaker because you're trading the 3-day weekend cash package, and there was no real fears about like the forecast. It still seemed like we had some time, to put it that way. I mean, I know personally I ran the air conditioner this weekend one of the days because it got up to like over 78 or something in the house. I was like, what the heck is going on? But I think people might have forgotten about daylight savings time and the impact that it has on the system. So essentially you're using an extra hour of everything. So all the power companies, right, they're generating an extra hour of electricity. So instead of flowing 24 hours worth of gas, you're flowing 25 hours. And generally it's just not a thing, but you kind of combine that with looking at on Sunday afternoon a change in next week's weather forecast. It all of a sudden started to look cold. And I mean, look, let's be honest. It's okay. Yeah, we're going to see some lows in the 30s, all the way from Texas up to, through the Midwest and the Northeast. And I mean, for sure, that's not, the cold, polar vortex by any means, but you kind of add a bunch of things together, and a market that's been anticipating, what is this storage narrative, and what will the impact be? And I think it just all came together on Sunday night. On Friday, the operators try to buy enough gas for the weekend and including Monday. And if they're off, they come in on Monday and they have to buy, they got to kind of rebalance the system for next day's flow. Because the way pipelines work is, you have kind of a band plus or minus a few percent. Otherwise you get penalties that you can draw off the pipes. So I'm guessing there's a lot of true up that happened. And then we were facing what looks like some, winter weather the second, starting next Monday, Tuesday. And all of a sudden, everybody just kind of ran and it fed on itself. We had cash at Henry Hub for tomorrow's flow. I think the range was like 350 to 361 or so. And that's enough to get people to believe, right? Then that seems reasonable now to pay 350 for December. But if we now kind of get through the week and tomorrow and the next day, and the cash market lines up differently because now everybody's kind of trued up over the weekend, we could certainly see a lot of volatility.
Well, that's the question. So, you've been speaking to us for a few months, or at least a few weeks now, since we broke out through $3. Before it broke out through three, you said, watch out once we do, we can get a big move here. And, we got up to about 335, then came back down to 320-ish, but held pretty well. And then, we get these gaps and you get these volatile moves. The question is, where do you think we go from here?
Well, we had a high, I think earlier, the high for this year, I think was in January, and it was around 363. So of course, that's a kind of a level to watch if we can maybe break above that. Personally, I don't, and I've said that the whole time, that I just don't think we're in a situation where things are just going to go straight up every day, and it would be that easy, right? And the other thing that is so different about the way this market is trading versus any other year is the way the spreads look. And every single, the Dec Jan, Feb, March, all made new highs. Dec is basically flat now to Jan, and we've got Jan over Feb by almost 17 cents, Feb over March by 32 cents. And that kind of keeps, like, you can watch the Jan Feb all day. And if you see it kind of starting to come in a little bit, they start hitting, the outright contracts. And if they see it widening out, and I think it's making a really unique opportunity in a lot of the options in the front months versus some of the backs, just the way volatility looks. So I'd be surprised if the rest of the week, unless we get over 460 or 363, I don't think it's going to be that easy. I think we'd need to have some other new problem come in, but people get really nervous and this thing drops a dime easily, just in seconds.
Yeah, I'm actually just, as we speak, I'm trying to pull up the options for November. That's
December.
Yeah, December, exactly. I'm just trying to see where the straddle is right now. Do you happen to have that in front of you?
Let's see. So let's just take the 350 straddle. Let's look at that really quick. 33 cents, 34 cents.
Is that for Friday?
That's for December. No, it expires in 22 days.
Do they not have weeklies?
No, they have dailies, same day options trade. But no, natural gas doesn't have.
Yeah, I see that one for 22 days, right?
Yeah. So, that alone makes the market a lot more volatile because, the options are expensive. You're looking at 44% vol for December, 51%, and these are for at the monies, right? 51% for Jan and Feb. It's just expensive vol, and they're monthly options.
Yeah.
So when you get past ranges, it's really easy for the market to move quickly, and a lot, because you don't have the ability for people to, how it takes a lot to get the S&Ps to move really outside of a range, because people can cover their risk in, buy a Monday option, buy a Wednesday option, Friday. It's just broken down into such little pieces.
Where do you think the pain is out there? Is it in a spread? Is it somewhere out in 2019, or is it in the front months? Do you get the sense that typically when you see a gap like this, and especially closing at the high of the day, for the most part within about a penny of the high of the day, very strong price action. Is there somebody short, you think, that's driving some of this price action?
Well, from the thing about natural gas is that the end user is, local distribution companies, right? It's utilities, and they're not, they just pass costs on to their consumers. So of course they're the biggest short in the market, but they don't really care what price they pay, because, they just pass it through. And then they mark up all their fees and transportation onto it. I think from a producer side for 2018, and I talked about this a lot several months ago, the hedges, let's say, that were put on these, costless callers, the strike on the call, and that most of them would have sold was, I think if I remember correctly, it was around 310 or something. And we haven't really had, there's been no danger of that until really this contract. I'm trying to think where November expired now. I don't know why I can't remember, but anyway, so if anything, they're called away, right, at these levels. And so, on the one hand, they have to produce, right? And on the other hand, they have to produce more if they want to capitalize on any of this upside price. But it's a difference, so December is probably a pain month for, just thinking through, how you feel like missed opportunity. And if they're all getting called away, there's some dynamics in that. And if, suddenly they have production problems and they can't deliver against, whatever calls they sold. So you could, I think, December has the potential to have some operational issues related, to hedges.
Yeah. Hey, then real quick, give me your take on everything with crude oil regarding price action and news. Here we are, we're at 62.85, which is pretty much the low of the day. We traded 62.50 overnight, but we traded 64.14. Looks like pretty miserable price action. What was the news, and what do you think here on crude?
Well, to me, crude is almost like Apple right now. It's just like a dead story. It lost so much value, and it's the end of the year. I'm not bearish. I'm not bullish. There's just no real narrative behind it. And so I feel like there's just not going to be a lot of capital flowing that way until, maybe we need a news event. And there is a narrative to get behind in natural gas. So to the extent of if you had, think about funds and trying to make year-end numbers and which market could you maybe get into that already has kind of a good backstory that you could kind of push on a little bit. I just don't think there's a very good backstory in crude right now. Gasoline prices I'm just shocked at $1.70. I mean, it's just such a gift as a consumer. Heating oil is, going to be the savior, and there will be a lot of heating oil burned this winter in the Northeast for power. And it's an equivalent natural gas price of almost $16. So unless, that really steps up to be the hero, I'm just not, I wouldn't get short crude oil here, but I just feel like, there's other places that feel like, I don't know, do I want to buy Apple stock at $200? I don't know. It feels like just kind of, there's no good backstory anymore for it. I know that's not really all that technical. But if that's my sentiment, I think there is a sentiment like that out there. And, is there going to be any axe to grind from now until the end of the year?
Yeah. I don't know, but it's ugly price action. We traded up to 77, and here we are at 63. Have the midterm elections tomorrow night. A lot going on, but yeah, thanks for popping on with us. Last minute natural gas, big day, up over 8.5%. So you had a lot to talk about there. It'll be interesting. I look forward to hearing you and Mike talking on Thursday. There'll be a lot to talk about for sure.
Yeah, the only thing that would have been better is if it had hit its limit up price. In trading today. It tried. I think it was 3.584, just, to really get some, solidify the whole picture. But we were a couple cents shy. So we'll see. Maybe tomorrow.
Maybe tomorrow.
Yeah. Maybe we'll go the other way.
That'll be interesting. All right. Brynne Kelly, Fundamental Angle. Thanks a lot for joining us. Talk to you a little bit later.
All right. Have a good one.